Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for September 29th, 2025. The Fed just decreased their rate, and they decreased it by a quarter. Last September they decreased it, last December they decreased it, but the reaction this time is a little bit better for us in real estate and mortgage lending than it was last time. Let me open a few charts over here. So first and foremost, we're going to look at last September. So this is September of 2024. And if you notice, as soon as that rate was decreased, or the Fed decreased their rate, mortgage rates took off like a rocket, right? Why? Data. Data made the interest rates go up because of supply and demand of cash. Now, if we look at this next part of this chart here, this is now December of 2024, and the Fed decreased their rate at that time. What happened to rates? They shot up again. Well, let's look at rates now from January all the way through now. I'm going to draw a trend line here, and this is where that trend is going, and it's kind of following kind of a downward slow movement. And rates typically will come down slow and then up fast. Well, it went down quite a bit. Now you have the September of this year, 2025, Fed rate decrease. It started to go up again, and then it kind of stabilized. In fact, today rates are lower than they were last Friday. Now, the difference between the Fed cut of a quarter, 0.25, and actual interest rates, they went up roughly 0.25%. So 2 weeks ago, roughly, conventional was at 5.8 and is currently at 6.1. Roughly, for a certain scenario. I ran a very generic vanilla scenario. By the way, you can run these scenarios too if you go to our website, lcmloans.com/rates. Okay, so 2 weeks ago, conventional 5.8 or so. This week, this morning, 6.1 or so, and that's an APR of 6.19 or so for this scenario. FHA was 5.2. It's currently 5.5, and again, an APR of roughly 6 or so. And this is without origination points or discount points. 2 weeks ago, VA 5.2, and this week VA 5.5 with an APR of around 5.6. Again, it depends on the scenario itself, but those are just generalistic numbers. You can run your own interest rate search. So it's on our website, lcmloans.com/rates. Go there and search your scenario. It's there for a reason. It's a tool. Realtors, borrowers, go look it up. Now just remember, the rates you see there are slightly rounded up. Okay, so usually you're not going to see the deal that you can actually get. Sometimes you might see a deal slightly better, but usually it's worse. Okay, which is good because then it's a little bit more conservative. Let's talk about comparing rates for a minute. Okay, your borrowers, or you as a borrower, you should be shopping mortgage companies. And in order to do so, you don't need to have them pull your credit. You only need a few pieces of information to get a quote. For us, you give us a call, you give us, and I just did this one right before I did this video here. You call us, you give us a credit score, what kind of program you're doing, purchase price, down payment. That's it. Any lender should be able to quote you a rate and cost of rate right then and there. What we're noticing is we are roughly 0.5% lower in rate for the same cost, roughly. Give or take. Each scenario is going to be a little different, but I've created a few videos, not every single time we beat everybody, but just a handful of videos. I don't have the time to record all those videos every time we beat somebody, but if you look at the email that you're being sent, down below there's just a few examples of, hey, this is example 1, example 2, but it happens every day, all day. That's part of the reason why our August was so good. We had the most amount of closings we've ever had as a company in August of this year. And partially it's because rates came down a little bit, but they've been downward trending for a while. It's because our rates are lower and our deal's better. That's just what it is. All right, so we're going to talk about into this week and what's going to affect rates this week, okay? Tomorrow, you have a jobs report that's coming out on Tuesday. On Wednesday, there's a manufacturing report, and that's not really going to affect rates that much. But the big ones are going to be Thursday and Friday. So Thursday is jobless claims, and that comes out on Thursdays. That's usually why you'll see sometimes a big movement late Thursday or on Friday, so Thursday or Friday. It's the jobless claims. Friday is going to be payrolls. I think it's non-farm payrolls, and you have unemployment data coming out on Friday. So those are the big ones to look for this week. Now, I'm going to pop open that chart again of the 10-year Treasury, okay? and I want to show recent information. So I'll pop that chart up. By the way, all the information we're talking about is in this big chart here behind me. But if you notice, the increase that we're seeing this time in rates is not like last September, not like last December, but it's different. It went up a little bit and it kind of stabilized and it's kind of hovering. Well, I think the primary reason for that is the budget. We're currently in a budget debate right now between the Republicans proposed one and the Democrats are against it. And so until that budget's passed, you might see it kind of hovering and waiting. Again, mortgage rates are almost purely data driven, and that data dictates supply and demand of cash. So because you've heard from the Fed, hey, and you see it in the news, I'm getting articles pushed in front of me constantly, hey, the Fed dropped their rate, mortgage rates are the lowest. Well, they were a few weeks ago, but they're not right now. But it's only slightly higher. It's really not that big a deal. So anyways, have luck, good luck selling homes, and have a good time. And if you need anything, give us a call. You can reach us from 7 in the morning to 11 at night, 7 days a week. Call us. We can quote you out really fast. Have a great day. See ya.